Hello, my name is Maximo Thomas, and I will do evaluation and recommendation of Taiwan semiconductor manufacturing using the HOLT methodology. Taiwan Semiconductor Manufacturing is based in Taiwan and trades on both the New York Stock Exchange and the Taiwan Stock Exchange. TSM owns and operates 15 semiconductor manufacturing plants throughout Taiwan, and they are known as a pure-play provider since they do not design, market, or sell their own integrated circuits. They actually act as a manufacturing arm for some of the world's largest technology and semiconductor companies. TSM is a market leader with sales 5 times that of their closest competitor. And they also compete with some of the largest tech giants like Samsung and IBM. Using the HOLT methodology, we will try to answer 3 main questions. First, has TSM's historical performance created shareholder value? 2, if so, has the market recognized and rewarded this increase? What is TSM's current valuation, and should we buy or sell the stock? Using the HOLT methodology, we will look at historical operating performance first. You can clearly see that over the past 10 years, TSM has generated returns above their cost of capital, which has led them above their peer group in this area. Looking at asset growth year over year, TSM had a large initial investment and slowed down, but since the 2008 recession has consistently increased asset growth year over year. This has led them to break above their peer group median this last year. Another impressive area of operational performance is their ability to generate and maintain high levels of operating margins. They are a clear leader and soar above their peer group. But has this historical operating performance translated into an increase in shareholder value and, more importantly, total shareholder return? Looking at the 2 main HOLT drivers of shareholder value, we can say yes, indeed, shareholder value has increased substantially and the market has rewarded this performance. Looking at a couple of traditional valuation metrics, we see that TSM has relatively good value as well. Now, using HOLT's methodology, we will forecast CFROI and asset growth and compare against market implied levels and see if there's an extreme pricing difference we can capitalize on. HOLT is forecasting CFROI levels between 13 and 11% and asset growth of 14 fading to 6%. But the market is only implying 5.35%. This clearly shows that TSM is undervalued, and we will check to see if there's a particular margin of safety before making a final decision. Here we see the last 3 years average of both asset growth and CFROI. Now we are looking at a forecasted level including our fade estimates. Using a sensitivity analysis matrix, we can see that given its current price of $4.35, the market is implying a very low growth expectations on both CFROI as well as asset growth. Using historical averages and accounting for fade, we believe that the current price of TSM is $7.50, making TSM an excellent buy and undervalued by about 80%. Thank you.